Hey guys, welcome back to another video, and today I've got something special for y'all. I have something really special. So, as you know, I trade indices. Well, now gold has been added to my plan. Yeah, I don't know why, but I kind of like the movement gold is kind of giving me these past few days. So, there's something crazy going on that I'd like to explain, but before I do, please guys, show love for the channel, like, subscribe and share the video with your friends, and let's help the channel grow, guys. And I'll keep on posting quality content. So before we get started, there is a kind of thing that I wanna do to help people. Um don't worry, it's nothing to do with account management or whatever that should be. I don't do that shit. But let me tell you guys, I've opened up a Discord server. Link will be in the description. And on the Discord server, I'll be live trading, sharing analysis and setups that I might be trading or setups to potentially look at. And if you're in the Discord group, you will get, sorry, sorry guys, you'll get a link that is linked to my Google Drive. In there I have pre-recorded videos on how to analyze the market. So it's just a little strategy that has been put down, nothing difficult, nothing to say. Like if you're in the Discord, you've got that thing, and I've allowed you or granted you access to watch the videos in the file. Then you can learn the strategy, ask questions in the Discord. We'll be having live trading sessions, two sessions per week, I think. Yeah, sessions a week. Then the other days will be just like setups and analysis. But it's not signals, guys. Keep in mind, it's just setups and trade ideas that I might be looking at or I'm waiting for to play out. So there are very few simple rules that you need to do in order to get accepted and get access to that video. Okay, so here are the requirements, guys. First of all, you need to be like in the Discord, like join the Discord. And in the Discord, for everyone who joins, I'll leave like a link to the YouTube channel which you should subscribe. But if you're already subscribed, just post screenshot of you showing that you're subscribed in the Discord, and I'll send you a personal link to Google Drive that you can open, and I'll grant you access to those videos. This is just something I'm doing to help others. I want to help my channel grow and I want to help people trade. So using that strategy, you can be profitable, but you need to put your own discretion with that strategy, because it's kind of like the first one I started with when I was still, testing the markets and all that stuff. And I've developed a trading plan around that strategy, which is kind of a little bit different from what it's being shown on Google Drive, because that's the previous version. But without further ado, let's get down to the chart breakdown of SPX 500. So as you know, the indices have been kind of like very bearish for the last week or so. Yeah, it's been very bearish market. So one thing I'm looking for, as you all know, I trade off support and resistance levels. So I just find these levels of support and resistance in the market. You don't need to place a lot of them, but just place the ones that have a lot of bounce play that's relevant to current price, of course. So I'll just put these here. which is relevant to current price right there. Put this one right, oops, sorry, I'll put this one right here. I like the bounce play that's kind of happening around these levels. So yeah, this is what I have for my daily levels. So these are points of interest for me. So as you can see, the market has been kind of bullish, breaking these lows towards the downside. So for those of y'all who don't know how to identify like market structure and all that stuff, maybe if you'd like me to do a video in depth about market structure, you can just leave it in the comments and it'll be a working project. So obviously the market is still in a downtrend, but we are yet to confirm where, like, if this is a valid rejection off of a support area, because this level once acted as support with some nice bounce play to it. So let me show y'all. So it had some nice bounce play towards it, but I'm not entirely sure. But as we go lower in the time frames, I think structure might tell us what's the market willing to do. So as you keep in mind as we analyze that the black lines are our daily zones. Okay, with that being said, black is our daily zones. Okay, just I want the best bounce play, guys. I don't want my zones to be perfect, like say, but I just want relevant bounce play off of these levels. So there we go. Okay, I think for H4 those levels are quite good enough. Remember, we're focusing on the most relevant piece of price action right here. So in simple concepts, we're still looking at these levels in the form of like our support and resistance levels. So as you can see, let me explain this really quick. We have major levels and intraday levels. So kind of like that's why I personally like calling them intraday levels, because they are in between like our major zones. So for say you can let's see, the market broke out, came back to retest and lost momentum. So from this point on, you could have looked for sales to your intraday level or your next major level, which it did break, come back to retest your intraday level twice, then it broke out. We're yet to have a solid retest of this level, but as you know, and as I always say, price action isn't, or support, let me not say price action, let me say support and resistance levels are not fixed lines or price points, but instead they are kind of zoned in to price. Like, see, they are kind of zoned into price. It's not literally one point in the market, so it's just zoned in. Check, it's zoned in the market. So as you can see, I'm still waiting for the market like to continue its bearish momentum up until we get a change in structure. Right now we're still breaking lows, as we currently broke this low, and obviously we have current high on H1, which is gonna be this one right here. But as you know, higher time frame structure is always the king. This is just my structure going down the time frames, so that I can get a better understanding of where like the market might go. So as you can see, we just broke a low, meaning the market will probably retrace somewhere to find some certain level of resistance, then it will probably continue towards the downside. Maybe this could be our level of that resistance that we are currently looking for, but price has to establish itself before we can actually look to take a trade off that level. So as you can see, market is casually breaking structure towards the downside. And one thing I want you to take in mind, remember that daily level. Let me just go back. The daily level where I kind of said like this was a previous area of support and resistance, and it has sufficient bounce play to it to be considered and named as an actual level which you can look to consider taking trades on. So let me write on this level, like we're gonna say is daily support, because now it's supporting D1 sub. So right there it's D1 sub. I think it'll show as we go lower. So yeah, daily support. So with this being daily support, and you can see that price on the daily chart was kind of losing momentum as it headed into this level. We can see much stronger confirmations that price might actually reject this level, but this engulfing is not, it is not too convincing for a certain reasons, but it is trying to show us that price might just go and tap to that resistance before it heads to continue its downtrend. This is just a probability, then come back, then break that low to here, but it's still a probability. I'm just looking at probabilities. I'm not saying the market will actually do this and that, but it's just a much more probabilistic approach to what I'm trying to do in the market. So yeah, right now I'm looking for a pullback. So let's just go to my favorite time frames, 5 minutes and the 15-minute time frame. So right here I'm just looking for levels like so. Okay, right now just looking at these few candles, let me highlight them for you. Just looking at these candlesticks right here, these candlesticks, they actually tell a lot of stories, but I'm quite confident that price might retest this level right here before the continuation towards the downside. So right here, for a few reasons, okay, those who know, and those who can see why I'm expecting price to come back to this level, tap, then come back to break if it breaks, or you can just target. If price does come back to that level, like you can just target the level of structure it left. So this being your target, meaning price from here might decide to go up. Okay, sorry, from let me, so price from here might go up, I don't know, here or here, but it would be unrealistic to target this because it would be breaking a high. But if it just weeks through, but still it's not a very nice situation to be in. So that's why the highest probability I'm looking for is a retest of this zone. Even if it can break a little bit above, then I can come back, target this zone, giving me, I think it's a nice, let me say, targets, then pattern to sell, then it'll give me a nice risk to reward ratio. Let me stop above this high. So 14 pip stop and a target of 63 points, which gives me a 4.5 risk to reward ratio, which is honestly perfect. I don't mind that. Okay, let's say if you are more aggressive, you're targeting your next major daily level, that's sufficient of 111 points, sorry, and a risk to reward ratio of 7.9, which is almost an 8. Dog, that's fire. But either way, this is my market approach for like SPX 500 in the trading day to come. So right now, as market is completely bearish, as we've seen for the past few days, this week, I think the only opportunity you can get to take buys is to scalp them, because fam, let's be considerate and focus on the highest probabilities right here in the market, because it's just a game of probabilities. No one actually knows how much money is going to go in and why they are targeting certain levels, but if you're approaching it with a scalping approach, I think it might just work out for you. So below this low, 16, around, let's say 18 pip stop and a target of 47 pips, which is 2.69, which is honestly not that great, but it's better than 1-to-1. So in that reason, I would take it, because there's still more validation of why price might just come back to these level, to this whole level right here, and tap into my zone. So for those who know, and actually they already know for sure, they are still expecting these buys, but the most highest probability would be to catch those sells coming back. But if you're an aggressive trader, you can catch those buys and catch those sells at the same time. So let's go to maybe a 5-minute time frame to confirm whether those buys are gonna be valid or not. So looking at, this is what I call like minor structure. This is actually minor structure right here. Simple basics, guys, simple basics. So it's placed. Okay, so this is simple basics towards structure. Right here we have our high, which I'll highlight right now with an H, meaning high, and down here we have our low. Just because it's like this, I will just pull it up so you can see, guys, what I'm trying to say. We have our low. So what's like the probability of price making, oh sorry, that's major highs, not to 5-minute chart. So 5-minute chart high was around here, as yep, this was the right high. So as you can see, price has already broken this high. What I'd look for is for price to break that next high, then come back to retest, I don't know where, somewhere around here. I think we might have a level of support. Then you take the trade up until here to the next level. I think the risk to reward ratio would be much better in this case, and that's why I love entering on the 5-minute chart and 15. Actually, it kind of depends on how the market is placed on that particular trading day or trading session. So right here we go, casual stop loss of around 5 points. I think it was 5 points, yeah, 5.13 pips and a target of 40 pips, where risk to reward of 9:1, guys. It's just a scalp trade. You don't need to be targeting high things, like, yeah. But this trade, all in all, it's a good trade. But I think the best option would be to wait for that rejection around that area to sell. I think, yeah, if price can cement its position and tell us that it's actually going to sell and that there's selling pressure within our resistance, then I think it's perfect to take those sells. So that's my trading approach that I'm looking to take on SPX 500. And yeah, I will not be taking these buys. Probably I'll be asleep when the market opens, but by 7 o'clock, yeah, 8 o'clock, I'll be on the charts by then. I'll be up ready to bounce. So yeah, guys, that's what I have for today. And quick breakdown of the charts using support and resistance. It's actually not that it doesn't work, it's how you approach the theory of support and resistance. I wouldn't be surprised if market just opens up and boom, shoots up, because there's a lot of reasons, and let me just say there's a lot of confluences that have built up currently. So let me show you a little secret. This will be our little secret on the YouTube channel. Let me show you how I identify the amount of risks I'm willing to take on an account. So let's say, okay, I have an account, right? I just opened an account and I fund, let me say I fund 200 rands. Okay, 200 rands, and they give me a credit of, wait, sorry, and they give me credit of around the same amount, which is gonna be 200 also. So right now my equity would be around 400 rands. Yeah, my equity is about 400 rands. So with that being said, I now know the amount of risk I'm willing to take. So I grade my setups. So it's setups, and I have B setups, sorry, B setups, A minus setups, I have A setups, and I have A plus setups. So this is how I usually risk. So risk wise, on the table, I'm normally putting around, per day of the account, I'm putting 10%. Mind you, this is big accounts only. If I fund 200, then I'm happily willing to risk 100% of that account anytime I trade, because guys, you cannot risk 10% of like 400, and that's bonus included, because 10% is just 20 rands. So can you guys imagine how tight your stop would be? I mean, yes, I do use tight stop losses, but for you as your average upcoming trader, you can't do that. But there are some who can, who are brave enough, but without substantial knowledge, I think it's kind of hard to put yourself within that criteria of people. So with that being said, so it's 100% of the account, which is 200, and that I consider as a small account. So okay, sorry, let me just write 100% of the account. So let's grade my setups. Let's say B setups. I'm happily willing to risk 20%, bonus included. So you see, I'm willing to risk 40 rand per trade. A minus setups, then I can take up my risk to 40%, to 40%. Then A setups, 50% of my account. So then A plus setups, I can risk anywhere from 70 to 85% of that account, meaning basically it's almost full margin. But yeah, let's put that into perspective right now, so keep this in mind. Okay, so the amount of confluences or reasons for a B setup, it's 3 reasons why I'm in that setup. A setup, A minus, it's 4, A it's 5, and A plus setup, it's 6 to 7 confluences that it has a high probability of going in that particular direction. So let's put that into perspective of the market. Let's analyze moves that have already happened. So this is kind of a little back test with me, guys. So let's take this move right here. This is from an intraday. Okay, let's take this one. I think it's much more clean. So from that doji close, obviously you'd go on a smaller time frame to get an entry, but for the sake of time in this video, we'll say from here up until intraday it's 50 points, and right here it's 100 points, and your stop is just above this week, making it 18 pips. So meaning this setup already has a lot of confluences for its own reasons, meaning here I would happily be willing to risk 80% of that account. Meaning, guys, if I have 10 US dollars in that account, which I think it's roughly that 10 or 9 point something or 11, I don't know the dollar exchange price yet, but I think it's around there. So I'm risking $10, and my risk to reward ratio is 6.8. So right now I'm risking the $10 to make $6. So if I had 100, I would be risking around 60 of those dollars to make nope, I would be risking, shit guys, I'm lost now, what the fuck am I saying? But I'd be risking, like, let's say, let's do this, 20% of 100 USD, or 10% per day, which is 10 USD to gain 60 USD. That's the conversion I'm looking for. I'm risking 10 USD to gain 60 USDs, and so on. If it's 1,000, I'm risking 100 USD to gain 600 USD. So you see the account kind of balances itself out. Don't mind the part where I was lost, guys. If you try to do this by head, and I trust me, some things will just poof away. But either way, these are the setups to expect, and let's just have fun, guys. Join the Discord and let's make a super, and I mean like the biggest community we can make. Let's make Discord fun. Let's trade, let's show each other our mistakes, and peace.